Hey, what's up guys, welcome back to the channel. So you might have noticed that I privated all my videos, and the reason for that is because I wanted to bring back quality into the channel. So the first thing I will sort of do is to bring back the news section and to actually cover the news instead of just covering my portfolio like I've been doing for the past few months. So hopefully you guys sort of enjoy it, and hopefully this helps me personally as well in my investing. So, first up, the dollar is dropping as there have been ceasefire talks in Iran. Okay. So, what we are seeing right here is if you actually look at the DXY, which is the US dollar index, there has been like a 0.5% drop in the US dollar. This is sort of one of the most egregious drops that I've seen in, I think, like the last year. There's like a 0.5, 0.6% drop in the US dollar, and because the US dollar has an inverse correlation to the S&P, if you look at the after hours for the S&P, there is a pretty substantial jump. So yeah, there is like a almost like a 3% jump in the S&P. Um, and what this basically means is that if you have other stocks in your portfolio as well, those stocks will also sort of jump up, right? If I'm not wrong, like Robinhood had a 6% jump. So what I think the market is summarizing here is that this might be real. This ceasefire might actually be real because I don't think we would have seen such a huge jump in stock prices and such a huge move down on the DXY unless this ceasefire was actually real. So Wall Street has taken their collective intelligence. They likely have sources in the Middle East as well, and I think I'm actually pretty positive that this ceasefire is real, and we might actually have the end of the Iran war, right? Because and now obviously things will change, and I might be speaking too soon. Hopefully not. Um, but I think Wall Street is basically pricing this in as the end of the war. So what can we sort of expect in the S&P and the broader market as well? I think we have a very good chance that this could very well be like a V-shaped recovery. I mean, look at that. Look at that. This looks like almost an exact copy, right? Um, and what I sort of expect with the S&P and the market overall is to get back to all-time highs, and we'll see if the market can break out. I think after we get back to all-time highs, and now I know I'm sounding very bullish right now, so hopefully I'm not too wrong. If I'm wrong, then I guess I'm wrong. Um, then if we get back to all-time highs, what will what the market will depend on is earnings, because we have earnings season coming back very soon. And if the earnings show absolutely no weakness based on this Iran war, then we will absolutely go back up. Okay. And I have a 2026 prediction market prediction. Maybe it's privated right now. But just to summarize, I think the market could very well continue to go up until SpaceX, OpenAI, and Anthropic IPOs. And once those IPO, I would get very, very cautious, because it's very possible that once the lockup period ends for that, uh, the investors inside those IPOs might sell, because those IPOs are selling at a very, very huge valuation. I mean, look at this. SpaceX IPO valuation is at almost 2 trillion, and they're only making 16 billion in revenue. So it entirely makes sense that once these huge companies IPO, SpaceX, OpenAI, Anthropic, um, there will be a huge, I think, flood of money into the market at first, because we will see a lot of market cap come from private equity into the public markets. But I think unfortunately a lot of these people, in SpaceX, Anthropic, OpenAI are gonna sell once that lockup period ends, and we might start to see a rotation out. So I think the market will still go up back to the mean, back to the average, based on this Iran ceasefire. But we'll see if the mega IPOs sort of put a cap on the market. Okay, so next up, we have stock trading intensity goes back up based on this news as well. I'm sorry, the title of these sort of articles just cannot be read. Okay, I just have to sort of summarize it. I don't know why they title it like that. So the narrative is sort of shifted over the past few weeks from the market is absolutely gonna crash. Okay, when the market was at not all time lows, but it was at like 630 for the S&P. Um, back then, okay, the narrative was that the market would keep going back down. Okay, and now the narrative has shifted to there are some interesting entry points. Okay, I just want you guys to take sort of note of that and to not really panic when the market dips. Right, I've been running this strategy for the year called like the buy the dip strategy, and I've basically been buying um every dip. Right, you can see in my portfolio that every stock that I bought was during the dip, and you know we'll see if this works. Right now it seems to be working, okay, but I think what you do when there is like a massive war in Iran and it causes like a huge reaction downwards, I think the best thing to do is to DCA and buy it, right? Because you can see like right here, less than few hours after the Iran war ended, we have a huge narrative shift, and people are saying that there are entry points. And when you see someone say this, obviously when people who have sold, maybe they didn't sell at the bottom but they sold at the top, right? They're just gonna get back in. They're just gonna get back in. So we'll see once again if this changes, but we are seeing a massive narrative shift right here. Next up, we have Anthropic. So Anthropic um, released a new model. Now this model is only for the big tech companies. Now I also give a tip. If you are subscribing to Claude or OpenAI, do it monthly, guys, because first off, you might not use up all your usage, um, and you might not need like the next month. Okay, if you're building an app, um, and also if you are sort of pre-subscribing for like a new model, just know that they can just do something weird, like to just give it to the big tech companies first. Okay, now there's a reason for this, because Claude Mythos is such a powerful model that it's actually enabling exploits, and this model can actually has the ability to hack into other systems. So they are releasing this to the big tech companies first, and they are actually partnering with a lot of the cybersecurity names. So if you notice, a couple of weeks ago when the market was down, cybersecurities were getting hit because every Claude release, people were saying that cybersecurity was going to go down the drain, and because of Claude, you would never need another sort of cybersecurity SaaS, right? And once again, the narrative has shifted because we found out that Claude is working with cybersecurity and not against cybersecurity, because of cost, right? There's no way like an LLM is going to um, replace all the cybersecurity, but we just had to wait for the narrative to shift, and I guess there's just no way you can go back in time and buy Palo Alto. You just had to go against the narrative. So that bodes very well for the cybersecurity sector. I personally have cybersecurity stocks like PanW. I focus a lot on the hardware cybersecurity because I know that Palo Alto, which provides hardware cybersecurity, is likely, they provide firewalls. They're not going to be replaced by Claude because Claude has to live in the system. And PanW is a physical hardware, right? So there you go. PanW and a lot of cybersecurity stocks are up based on Claude Mythos, actually partnering with cybersecurity instead of against. So just to end it off here, this is the app I built. Now I'm not sort of shilling it or anything. I actually don't really want to make this too public because there are a lot of things in the app that I'm sure are broken. And I was just able to code this with Codex. Um, so we can see here, I rebuilt CNN's Fear and Greed. You can see that the current Fear and Greed is currently at 22. So we are sort of recovering here. Um, you'll notice, back, the market momentum charts. Every time the S&P drops below this 125-day moving average, which is basically the Fear and Greed, there's a huge chance that it will go back up. We're seeing the same thing with COVID actually. Now that if we look back, the COVID dip is actually very, very short. So we are seeing a sort of recovery, and we'll see if this continues. It's very, very possible that we literally follow the exact same pattern as the last time in April of 2025, and the war in Iran actually escalates, and then the market just goes absolutely parabolically down again. So we'll see if that happens. I personally don't think that will happen because if we have such a good, such a big inflows from the uh, institutions into the market, then this might very well be the end of the Iran war. Because there have been a lot of fake outs in the past, but I don't think we are seeing a fake out that had this much momentum. Okay, so we can see here futures for tomorrow are pretty green. The DXY is falling very strongly, so we just covered that. And the 10-year yield is pretty stable. Okay, so there you go. Thank you guys for watching. Hopefully you guys enjoyed this video, and see you in the next one.